Have you ever heard of a wild prediction that seemed too insane to believe? Welcome back to Stock Whispers, your gateway to investment brilliance. Are you ready for a roller coaster ride through the world of finance, where fortunes can soar as high as a Bitcoin rocket or take a dive like a rock star after a wild night? Today, we're diving into the thrilling world of Bitcoin predictions. Plan B, a renowned name in the crypto community, has given us some wild numbers to chew on. Buckle up, because we're talking about Bitcoin hitting $100,000 soon and skyrocketing to a jaw-dropping $600,000 by the end of next year. First off, let's touch on who Plan B is. He's the brain behind the stock-to-flow model, which has turned a lot of heads for its accuracy in predicting Bitcoin prices. The model works by comparing the total supply of Bitcoin to its flow. That's the number of new Bitcoins produced each year. Think of it like assessing the rarity of gold or silver. This model isn't just fancy math. It's about understanding how scarcity drives value, much like a rare piece of art or a vintage wine. The stock-to-flow model doesn't just throw random numbers, it uses historical data to forecast future trends. For example, when Bitcoin halves, which happens every 4 years, the production rate of new Bitcoins is cut in half. This sudden drop in supply, against a backdrop of steady or increasing demand, typically leads to a sharp increase in Bitcoin's price. This predictable pattern has fascinated investors and has been a hot topic at many financial tech conferences. It's like having a weather forecast, but for financial storms. Understanding this model isn't only crucial for crypto enthusiasts, it has broader implications for how we understand investment and market dynamics. By tracking how Bitcoin behaves, we can learn more about the effects of supply and demand on pricing, not just in digital currencies, but in other markets as well. This kind of analysis provides insights that are valuable for anyone interested in the economic factors that shape our world. From seasoned investors to curious newcomers, grasping the basic principles of the S2F model can provide a more informed perspective on the fascinating and ever-evolving world of finance. Bitcoin just closed this month at a new all-time high of $71,000. Yes, you heard that right. Even before the much-anticipated halving event, we're seeing top-notch performance from Bitcoin. In fact, we're witnessing a triple-top formation. Historically, this setup has shown to be a precursor to significant price jumps. It's like watching a sleeper hit the gas pedal just as the race starts. It's exciting and a bit nerve-wracking. With every new record, the buzz around Bitcoin grows louder. Social media and news outlets are abuzz with predictions and speculations. Everyone wants a piece of the action, from seasoned traders to everyday individuals curious about digital investments. This surge in interest boosts Bitcoin's visibility and could potentially draw in more investors, further fueling its climb. Imagine a snowball rolling down a hill, gathering more snow. That's Bitcoin right now, growing bigger and faster than ever. Moreover, Bitcoin's rise is not happening in isolation. It affects other cryptocurrencies and the broader financial market as well. As Bitcoin climbs, it pulls up the value of other digital currencies, sometimes known as altcoins, and can influence investment strategies across the board. Additionally, it's compelling businesses and governments to take notice and consider the implications of digital currencies. The excitement around Bitcoin's performance is more than just about numbers. It's reshaping how we think about money and investment in the digital age. Now, here's where it gets spicy. Plan B isn't just throwing out random numbers. He's basing his predictions on solid data. He believes that reaching $100,000 this year is not just possible, it's inevitable given the current trends. And looking further down the road, he's seeing a peak close to $600,000 by the end of 2025. Imagine that, a digital currency born from a few lines of code, potentially rivaling the price of a small house. The confidence in these numbers comes from more than just historical performance. Plan B looks at on-chain metrics and other technical indicators like the relative strength index and the 200-week moving average, both of which are at their peak levels right before a halving. These aren't just abstract concepts, they are like the pulse and blood pressure of a patient, giving a clear sign of health and potential risks. Global economic events also play a crucial role in Bitcoin's meteoric rise. For instance, during times of economic uncertainty, like inflation or currency devaluation, more people turn to Bitcoin as a safe haven, much like gold. This shift in sentiment further drives demand, propelling Bitcoin's price upward. It's fascinating to see how a digital asset, which was once an obscure hobby for tech enthusiasts, is now becoming a critical part of global financial discussions. Additionally, public perception and media coverage have significantly impacted Bitcoin's price. When influential figures in technology or finance speak positively about Bitcoin, or when major companies announce they are integrating it into their payment systems, the price often spikes. It's a dance between public sentiment and market dynamics, with each step in the dance influencing the other. As more people learn about and understand Bitcoin, its integration into everyday financial dealings becomes more likely, setting the stage for further growth and acceptance. For those new to the crypto scene, halving is when the reward for mining new Bitcoin blocks is cut in half, effectively reducing the rate at which new Bitcoins are created. This scarcity typically leads to price increases. Plan B notes that each previous halving has closely followed his model's predictions, and he expects no different this time around. It's a bit like cutting down the production of a popular car. Fewer new models mean the ones out there could become more desirable. The halving event also has a significant impact on the community of Bitcoin miners. These are the people and companies that operate the computers which secure the Bitcoin network and validate transactions. When the reward is halved, their income from mining new blocks also drops suddenly. This can lead to less mining activity as less profitable miners drop out, further reducing the new supply of Bitcoin and possibly driving prices up. It's a challenging time for miners, but for those who stick it out, the potential rewards could be substantial, as the reduced supply often leads to higher prices. As the next halving approaches, anticipation builds within the Bitcoin community and beyond. Investors and analysts watch closely, speculating on how dramatic the price jump could be this time. This anticipation itself can drive up the price, as people rush to buy Bitcoin before halving in hopes of catching the expected rise. It's a self-fulfilling prophecy to some extent. The more people believe the price will go up due to the halving, the more likely it is to happen as demand increases in the lead-up to the event. This cyclical effect draws even more attention and investment into Bitcoin, showcasing the unique dynamics of this digital currencies market. Interestingly, Plan B has observed a new pattern emerging with what he calls a triple top before this halving. This could indicate a stronger market reaction than in previous cycles. It's not just about numbers rising, it's about the entire market dynamic shifting. It's as if the market itself is learning from each cycle, getting smarter and more responsive. This phenomenon has captured the interest of a broad spectrum of investors, from casual enthusiasts to serious financial institutions. As the patterns become more predictable, confidence among these investors grows. They are beginning to see Bitcoin not just as a speculative asset, but as a viable component of a diversified investment portfolio. With each halving, more investors are getting involved early, hoping to leverage the expected price surges for substantial gains. This increased participation further fuels the market's momentum, creating a bustling, vibrant trading environment. Moreover, each cycle of halving and the ensuing price increases draw considerable attention from the media. Reporters and analysts are always on the lookout for the next big story, and Bitcoin rarely disappoints. This media coverage plays a significant role in shaping public perception, which in turn influences market behavior. The more the public hears about Bitcoin's potential, the more they are inclined to participate, either out of fear of missing out or genuine belief in Bitcoin's value as an asset. Thus, the cycle of halving not only affects the internal dynamics of the Bitcoin market, but also how the world views and interacts with this digital currency. No investment, especially in crypto, comes without its ups and downs. Plan B acknowledges this and points out that while we're aiming for the moon, there will be bumps along the road. Expect dips of 20% to 30%, which, according to him, are normal. His advice? Don't panic. These dips are just part of the journey. It's similar to weathering a stormy sea. The seasoned sailors know the importance of holding steady and trusting their vessel. Plan B shares that during these bullish times, he prefers to hold on tight to his Bitcoin investments. It's a bold strategy, but it shows his belief in the market's long-term trajectory. He's playing the long game, focusing on growth over years, not just months. This isn't just a financial strategy, it's a philosophy embracing the volatility as part of the adventure in the crypto world. Understanding and managing risk is key to navigating the volatile waters of cryptocurrency. Plan B often discusses the importance of not overextending oneself financially. Just like you wouldn't put all your life savings into one stock, diversifying your crypto investments can help mitigate risks. It's about balancing high-risk, high-reward opportunities with safer bets to maintain a healthy portfolio. This approach helps protect against the inevitable fluctuations in the market and can offer more stable, long-term growth. Investing in Bitcoin can be a roller coaster, not just financially, but emotionally too. Plan B emphasizes the need to remain psychologically resilient. The highs can be thrilling, but the lows are often testing. Staying informed and maintaining a clear, level-headed approach during these swings can prevent hasty decisions that lead to losses. It's about being patient, staying the course, and not letting the market's volatility dictate your emotions. This mental fortitude is what separates successful investors from the rest, allowing them to capitalize on opportunities when others may withdraw in fear. In conclusion, whether you're a seasoned investor or just crypto-curious, Plan B's predictions are something to watch closely. They're not just about the potential financial gains, but also about the broader implications for the future of money and investment. As we move forward, keep an eye on these developments and maybe, just maybe, consider how you want to position yourself in the evolving world of Bitcoin. Thanks for tuning into Stock Whispers. If you enjoyed this video, give us a thumbs up, subscribe, and hit that notification bell so you never miss out on our expert investing advice. Until next time, keep listening to those whispers and let them guide you to your next big win. See you soon.